From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines, here's your host, Neil Timmins.
We've got Kurt Mumm here. Welcome to the show, Kurt.
Hey, thanks, Neil.
I'm glad you're here. Say, for the audience to say, who are you? Where are you from? What do you do?
My name's Kurt Mumm. I'm president of Cushman and Wakefield Iowa Commercial Advisors here in Des Moines. We are Cushman and Wakefield, for those that don't know, is one of the top 3 commercial real estate companies in the world. We are an alliance member, which means we're one of the few companies within the system that's not corporately owned. But yeah, commercial real estate, we're a full service commercial real estate company. So that means we do brokerage, property management, we do some maintenance work and so forth. So soup to nuts, do a little tax protest work and all the good stuff.
Take me back to the very beginning, and then I want to walk through because you've got a long career in the commercial world. Where are you from originally?
Missouri Valley, Iowa.
Okay.
So far over western side of the state and just 20 miles north of Omaha Council Bluffs. So that red washed over about 50 miles. So was a Husker fan, but has kind of switched my allegiance in Hawkeyes and Cyclones now. So a lot better. Parents, dad was an attorney, mom was an accountant. So they were investing in real estate when I was young, mainly farm ground and so forth, but had some multifamily stuff as well. I ended up going to the University of Northern Iowa, which probably it was the farthest away from home as in a state-run school, and enjoyed it. Was great. And at the University of Northern Iowa, was pursuing a finance degree. At the time, they had a real estate emphasis, which to me was interesting. And I think I got hooked when I'm sitting in the principal's class and the professor said, hey, 75% of the wealthy Americans made the majority of their money through real estate. So I'm like, that seems like a good opportunity. So continued through that path, and upon graduation had an opportunity to go to work for the then largest commercial real estate company in Des Moines. Said, hey, we'll take a flyer on somebody straight out of college. They'd really never done that before. And my professors that I really respected kind of said, this could be a really neat opportunity. So interviewed for the position and they explained it to me, and I got done with the interview and kind of reflecting on it. And I'm like, so they're going to ask me to move to a community I'm not from and I don't know anybody and sell something I don't know a whole lot about, and I'm not going to get paid until that happens. And I think my original package was I had $1,000 a month draw. And so if I didn't sell anything, I had to, by the end of the year, I would have to pay that back. So I remember fondly, I called my mom and I was excited because this was my path. And she literally cried and said, why would I send you to, why would you go to a college and if you're just going to sell real estate? I'm like, well, I don't think you understand this, but here's where I'm going. So anyway, but it's worked out pretty well since then.
Yeah. So. All right. So you started that and presumably started as a broker, as an agent.
Correct. Yes. So
were you inside of any asset class? What were you doing? What did the first year look like?
So, coming straight out of college, and that was, 93 is when I graduated, not to date myself too much, but I've been in the business 31 years. But coming out of school, I was probably the youngest person in that office by 15 years. From a technology standpoint, looking back at it, I was not super technology forward, but a lot more so than anybody else in the office. So I had my own mapping software, and at the time that was akin to holy smokes, this is cool. And then I had some financial analysis software that I used to help folks that were, buying apartments and so forth. At the time, everybody was using a gross rent multiplier or had some of these other things. And what I was able to do is just give me the information. Let me plug it into my system, and I'll give you a 4-page report that's going to show you your IRR and things that a lot of people weren't doing. But it worked out. And then I also was able to work closely with a lot of the more senior brokers, and they knew that if they brought me in, I could do a lot of the heavy lifting and so forth. And they had the relationships. I had zero. I had time. I had an opportunity to kind of lean in on some of that stuff. And it worked really well. I mean, a great group of people and mentors. And, I was able to work on deals that you probably wouldn't have had an opportunity to work on until you'd been in the business a lot longer than what I had been.
What are you saying is you found ways in intra-office to add value to those who were there. And as a result, you got yourself exposed to experiences that most people just don't.
Absolutely.
Yeah.
Yep.
Okay. So then eventually you're kind of on your own, I suspect.
Yep.
You graduate, quote unquote, right?
Yeah.
And you start selling properties. You are the person.
Yep. So did a lot of investment brokerage. Again, going back to some of that financial stuff. It clicked for me. I enjoyed it. My joke was always, I'm a terrible salesperson, but I can sit down and really help you. Let's map this out or think through it. And, having those conversations, and we share it with some of the newer people into the business, I built more relationships and opportunities through counseling people maybe not to do a deal. Well, Kurt, why would you tell me not to buy this building? You're not going to make any money then. No, but based on our conversations, this isn't something that works for you. I mean, there's more stuff out there. Let's just keep looking. And, I think people really valued that. They appreciated it. And I think that's having the ability to see the long game versus, what can I sell today and make a commission. I think being more transactional, being more relationship versus transactional, I think has always been something that I've been able to do. And I think that's worked well.
I like what we said there. The relationship is worth more than the transaction.
Absolutely. Yeah. Absolutely.
Is there a particular asset class that you were drawn to, or just kind of run the board?
I think run the board.
Yeah.
I think you go where the opportunities are, and that ebbs and flows. And I'm more of a price per pound buyer versus chasing the new shiny deal, and more of a contrarian probably by nature too. If everybody's going here, I'm saying there's got to be something else over on the other side of the room that we should look at. So I started out, I was doing a lot of site selection for retailers and so forth. Through that, found a couple empty buildings or soon to be empty buildings on good corners. My first real estate deal I did 2 years into the business, and I went, I didn't have any money. So I went to my parents and I said, hey, want to basically asked them to co-sign a loan, and they said no. but what we'll do is you can be our minority partner on the deal. And I'm like, okay. So bought a little building on a good corner in Clive, and then followed that up with another one the next year. And so it just kind of always enjoyed doing some of that stuff too.
Yeah.
So
I suspect some of that just snowballs over the longevity of one's career.
It does. It's nice to have it in place, and it's also nice to, I still say my focus is making sure our clients and so forth are first. As far as, I think the perception would be, well, you're in the business, so you're just going to cherry pick all the good deals. No, we don't have to, and we don't need to, and we don't want to. If now I'm at a place where if we find a good deal every other year or something, that I can put a group of people together that are in my office that we enjoy working together and so forth. That's kind of more the focus on looking for opportunities.
Yeah. That, and everybody's got a different box, right? Different box, different set of needs, a different set of circumstances. The money's in play at all times, which means at times people just don't have the money to go do something. They've got to engage someplace else or employ.
And different people bring different things to partnerships. Just because we're in a partnership on this property doesn't, and it's an industrial property, doesn't mean that we're going to be partners on a retail opportunity. There might be some different people that bring different things to the table on that stuff. So I think it's just yeah, you, if I had a superpower, my joke is that my superpower is picking great partners.
Yeah.
And so I've been very fortunate with that.
Hi, it's Ava Baukamp, the Investment Relations Manager for Neil's firm, Legacy Impact Investors. I'm inviting you to join us for our next investor workshop, our monthly Legacy Briefings. In these tactical Zoom calls, we cover topics and case studies for subjects such as taxes and depreciation, navigating macroeconomic shifts, and evaluating deals as a passive investor. At each virtual workshop, we are joined by an industry guest who covers their topic in 45 minutes or less. No fluff, no pitches, just education and conversation with an expert each month. Every workshop ends with live Q&A from Neil and our guest. All briefings happen on the last Tuesday of the month at 3 p.m. Central. If you can't make it live, recordings are sent out exclusively to those who've registered in advance. To join us on the last Tuesday of this month, visit legacybriefing.com. Go to legacybriefing.com to register. If you're a first-time registrant, I'll send you a free resource at sign up. Head to legacybriefing.com and I'll see you soon.
Talk to me. I can't talk to anybody who's been around as seasoned as you are, who went through the '08 era, without asking about it. What was that like, both at the brokerage level for you, and then also from underlying assets you held at that time?
Yeah. So it was. I think it kind of. You start to realize that, the banks or, the money is the gas that runs the engine. Yeah. And if there's no money to be had, the engine doesn't run. From a brokerage standpoint, it slowed down pretty dramatically and it was a little challenging. I mean, you have a number of brokers that just couldn't not focus on the fact that, well, if you pick up the Wall Street Journal, it says that it's really bad.
Right.
And, but at the same time, there were other brokers that just found a way to make things happen. For us, or for our group, at the time, I had bought was with a group that we acquired a downtown CBD office building. We assumed non-recourse CMBS financing. We lost 60% of our tenants. And so there was a situation and we handed the keys back.
Sure.
So through that process, became familiar. They brought in an out-of-state receiver, and receiver, somebody that when there's a foreclosure, those guys step in and they serve as the liaison between the lender and the borrower. And, this guy was just, big city. He's gonna, show you what for. And, I'm demanding this. We sat down. I'm like, this is a friendly situation. This is a circumstance that we're comfortable with. You guys, your lender's comfortable with it. It's not adversarial.
Yeah.
So through that, I kind of, started looking at the situation, and there was a number of people going through the same process.
Correct.
And it seemed like there was a lot of people that were bringing in some out of market folks to serve in that receivership role. And I kind of had a couple attorneys approach me and say, hey, would you be willing to do this? At the time we had property management, we had brokerage, and, we had an accounting team and so forth. And I said, yeah, I think I can bring a more rational approach to some of this stuff where, my approach is essentially, I'm the receiver. So look at it as mom and dad are getting a divorce and I'm just the person that's going to take care of the kids while you guys sort the stuff out. Yeah. So I think it went pretty well. And I think I was able to navigate some of those waters pretty well. And, because I've got a lot of respect for all the developers and investors and so forth. I don't think anybody was trying to do anything super, super slick. I think it was just a function of the market. So it
caught a lot of people.
It caught a lot of people. So was doing some of that stuff really as a little bit of started looking at it as a business generator for our brokerage team.
Sure.
And property management folks. And so I would say that kind of helped us through that slow period. And you learn a lot. It's personally, I viewed it as an educational opportunity where, all right, I know investor A is not a dumb person. He's a smart person.
Right. How
did this go upside down? Yeah. And where were the mistakes, if there were some? Sometimes it's a situation as simple as this company got bought. This company, tenant A went belly up. Yeah. And so as a landlord, you're sitting there, you can't make the mortgage payment. Right. And the bank drops the hammer. So it's like, okay, right. let's just do it. But it was an opportunity for me to kind of see behind the curtain, see a problem, and then work on trying to fix it or at least minimize the pain or potentially turn it around. And so from that standpoint, I felt like I gained a lot by doing a lot of that stuff. So
well, it's interesting that from a problem, i.e., handing the keys back on a particular project, turned into an opportunity for you to see how you could do something better, serve a role in the marketplace.
Yeah. No, it was good.
Yeah. So. You've dealt with and advised tons of investors over a period of years. You see people get it really right and get it wrong. Mm-hmm. Those investors out there, when they're putting projects together, those who get it right, what are they doing? What commonalities do they have among each other where they got it right? And I'm asked the same question. Those who get it wrong, what are their common things? What's that thread?
Yeah, and I think it's different across the board, but in general, I mean, I've found that you do a deal, it's a good deal, and then all of a sudden you want to scale it from 1 to 10, just right out of the chute, and they don't have the back office, they don't have the infrastructure in place to handle that much more. So I mean, for me, if I had to say one thing, it's just people trying to do too much too fast. Yeah. If I can reach out and I can grab this one thing and that's a great thing, then why shouldn't I go out and just grab a whole armload and throw as much in my bucket as I can? Sometimes that measured growth is the way to do it, and not trying to do everything or too much too soon. Kind of, I would say that's the one thing that if I look at some of this stuff makes the most sense to me. Just, measured growth. Don't, just because you think you can hit it out of the park doesn't mean every swing needs to be trying to hit it out of the park.
I have a friend of mine, what you just said reminds me of what my friend says. He says more people today in this country die of indigestion versus starvation.
There you go.
It's right in line with exactly what you just said.
Yeah.
Just take on too much.
Yeah.
So, what, thinking back over your career, the investments that worked really well, are there strategies that you employed, a couple of things that helped you identify pieces to pick up or things to stay away from?
For me, I think it's going in to an asset with the assumption you're going to own it forever. I'm not a flipper. I'm not that person that looks for the short-term lift and then let's monetize that and then roll it into something a lot bigger. Yeah. Finding something that really looks like a good deal and that you would be pretty comfortable owning it 10 to 20 years down the road. That doesn't mean that somebody's not going to come along tomorrow and say, hey, I want to own that more than you, and you still transact it. But there's people that go into opportunities thinking, I'm going to do this, and then somebody else is going to, I'm going to buy it for X, and somebody's going to pay me 5X as soon as I've owned it for a year. Yeah. That's not necessarily how I look at stuff. So I think finding that real estate and being able to look down the road and say, okay, it's a good neighborhood today. It's going to be a better neighborhood tomorrow. And really looking at some of those value add opportunities that, they don't necessarily happen week one. It might take some time to get it to where you want it to be. But
for being in Des Moines and working in this industry like that, what's something that surprised you over the course of 31 years?
Just the resiliency of the market. I mean, we're experiencing in our market today, the CBD is having some issues with office vacancy and so forth. But, again, using, my comment that we were just talking about, having that longer range focus. I mean, if all of a sudden I can pick up some great properties at 30% of replacement costs over time. I think it's, I'm comfortable betting on the Des Moines economy and Des Moines growth. We were just at a conference recently for Cushman Alliance members, and we had an economist speaking about some of the negative headlines that you hear in these bigger markets, and basically her takeaway was, be fortunate that you're in a tertiary market, because you guys aren't seeing the vast swings that some of these folks are seeing in the San Franciscos and in the New Yorks and so forth. Just we've got back to more measured growth. The comment everybody uses is, we don't see the high highs or the low lows.
Yeah.
That's okay. It works.
It seems to me it creates a better opportunity to create stability and longevity in one's business.
Correct. Yeah.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
How did having parents who were an accountant and attorney, how did that affect you as an adult in your career?
I would say they were, I'm going to keep using the word measured, but I mean, they were always looking at investing and explaining the difference between a want and a need. Do you need that new pair of tennis shoes that everybody else has got, or do you want it? Because if you need it, we'll get it for you. If you just want it, that seems ridiculous. We're not going to pay $90 for a pair of Reebok pumps just because all the cool kids have them. So they were very wealthy for our community and so forth, but never showy, if that makes sense.
Yeah.
But then also just really kind of being able to explain the difference between, if you spend this today, what's the implications down the road?
Yeah.
Wouldn't you rather have that money in an investment working for you that will provide for something down the road versus a brand new car or something along those lines? So I think early on, seeing their success and, kind of philosophy and being able to invest in real estate kind of helped set the table, so to speak.
There's a lot of clues.
Yeah. That was good.
All right. Final 3 questions. You ready?
Yep.
If you had one piece of advice to give your 20-year-old self, what would it be?
Just lean into relationships, all around, whether that's personal, professional, or whatnot. It's just, the more people you can surround yourself, the bigger your circle is, the more fun things will be.
2 books that changed your life.
Rich Dad, Poor Dad. And then recently, I would say Die with Zero. Just simple read, and when I say read, it's audiobooks for me because that's what I do in the car. But the premise of the book is just don't wait until you're 75 to enjoy life. Your utility and so forth in life. Spend some time making memories and experiences and so forth along the way. And even if you don't feel like you can afford travel at a younger age, figure out a way to do it, because you're going to have the rest of your life to make money, and there's not a guarantee that you're going to have your health. And when you have the money to do some of that stuff, you just got to do that.
If you're cast away on an island for a year, you can only get 3 pieces of data each and every month to know how your business is running. What 3 things must you know every month?
Ugh. What 3 things? One, did all my tenants pay rent?
Yeah, that's fair.
Are all my brokers putting deals together?
Mm-hmm.
And just the weather in Iowa. Is it beautiful, or just something to help me pass the time away.
Yeah. This has been a great conversation. We could sit for hours.
Yes.
And talk, and we'll certainly have to have you back. See, I asked a lot of questions. What's one question I did not ask but should have asked?
So my recent hobby, I just recently opened a restaurant 2 years ago. So there you go. When you can't be bored. I think it was a direct result of becoming an empty nester. I've got 3 kids, and my youngest just finished her sophomore year in Alabama. But I was really worried about what I was going to do when the kids were out of the house. And so my partner and I decided, you know what, let's give this restaurant thing a go. And it's been wonderful. I love being in front of people. I love talking to people. And it's filled a hole for me, which and I've really, really enjoyed it. So
I suspect you probably had to learn a whole bunch of new things, be able to execute.
Still learning on a daily basis. Again, the key there is to have people on board that do a wonderful job. So I mean, we've got a tremendous team of managers, chefs. I mean, people that have got a lot of experience in the industry. And yeah, along the way, my partner and I are starting to figure it out. So we went to the Culinary Institute of America for a boot camp just so we could understand what they were saying in the kitchen, and leaning in on all different aspects of the restaurant business.
So, name of the restaurant?
Destination Grill.
Destination Grill, found in Grimes.
In Grimes, absolutely.
Yeah,
so.
Fantastic. For people that want to find you, they want to follow you, that want to connect with you, where can they go? What should they do?
Cushman and Wakefield, Iowa Commercial Advisors. My email address is kmumm@iowaca.com. LinkedIn, I'm on LinkedIn a lot and stuff like that. Yeah. Email or call the office. It's all good.
There you go. Links below in the show notes, everybody.
Thank you. Take care.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.